Have you ever wondered how you can transform your savings to hundreds of thousands of dollars? Or perhaps you want to start your wealth building journey but not too sure what to do? Now, here's the short answer. Invest in Vanguard ETFs. Now, if you are lost in this financial maze and want to start a straightforward wealth building path, keep watching. By the end of this video, your understanding will have been transformed and have grasped the knowledge on how easy it is to actually build wealth using ETFs over the long term and what a powerful passive income tool it is. Before I go further, please note that this video is educational only and should not be perceived as a financial advice. Now let's get straight to it. Now there are thousands perhaps of ETFs and managed funds combined across the globe issued by different fund managers. But why Vanguard and what is Vanguard? Vanguard is an American index fund manager and that is the first of its kind. They are the first to introduce index investing to the world, thanks to the late Jack Bogle, the founder of Vanguard. Now what is ETF or exchange traded funds? Let's assume these eggs are single stocks that's traded on the New York Stock Exchange. Owning individual stocks would mean you would have a basket of eggs, loose and separated. There's an old saying I bet you're well aware of, which is don't put all your eggs in one basket. Yes, sure, it's an old saying in managing risk. Logically, the reason for this is so that the eggs don't go breaking, sitting around loose in the basket. Now, when you have an ETF, this can be likened to eggs in a carton in the basket. And not just that, the carton contains only top quality eggs. And whenever the eggs in it are considered to be no longer be high quality, it will be removed or shuffled around from the carton and replaced with higher quality egg. This carton of eggs is what we call an ETF, figuratively. By the way, I probably should have led with this. I am in no way sponsored or affiliated to Vanguard, although I am a former employee, which is why I'm very familiar with them. The main reason why I choose Vanguard's ETF is due to their low expense ratio. Now, what on earth is expense ratio? Low expense ratio simply means Vanguard does not charge you much for managing your investment. This is one of the important things you should be looking out for when choosing an ETF or managed fund. Managed fund is a slightly different instrument to ETF. They are a mirror of an equivalent ETF consisting of the same underlying assets. And that is a topic for another day. Be sure to subscribe to know more. Now, to the next question. How do you invest in the Vanguard ETF? And of all the ETFs that Vanguard offer, what should you invest in? Before I answer those questions, it is important for you to simply understand your investment goals. Now, what do I mean by this? This simply means you need to firstly know your risk appetite. Are you willing to take high risk investments or are you playing on the safe side? Next is to know what you wish to do with the invested funds down the track. Are there needs for you to withdraw these funds prematurely? Third, know how long you intend to invest the funds for, and this is what we call investment time horizon. Normally the average recommended time horizon is 5 years. Once you have all this crucial information down pat, it will help you determine the ETFs that is suitable for you, and we can now dive into the how and which one you should be choosing. The how is pretty simple. All you gotta do is go to Vanguard.com if you're in the US, select Vanguard Personal Investor, and simply follow the steps outlined in the page to open an account. If you're in other countries where Vanguard is available, it will be the local Vanguard websites, such as in Australia, vanguard.com.au or vanguardinvestor.co.uk if you're in the UK, so on and so forth. You can also download the mobile app by searching Vanguard Personal Investor in the Apple or Google Play Store. If you don't have Vanguard accounts available to be open in your country, the next best thing to do is open an online brokerage account that allows you to invest in foreign stocks, as the beauty of ETFs is that they are tradable on the global stock exchange provided that they are listed and tradable by the broker of your choice. So it's important to know before you choose a broker that the following ETFs I am sharing with you are listed. Once your account is open, you will need to deposit funds into the Vanguard cash account that is linked to your personal investor account, and then you can begin investing in the chosen ETF. Now I hear your burning question, what ETF should you be choosing? In my experience and research, the best ETF personally for me is the Vanguard Total Stock Market Index, also known as VTI in the New York Stock Exchange ticker. If you're not in the US, you're in Australia, for example, you can purchase Vanguard Total Market Shares Index with the ticker VTS in the Australian Stock Exchange. Usually, there are always equivalent ETFs being listed outside of the US where Vanguard operates. However, there are probably tax implications on receiving income or gains on US domicile fund outside of the US, in which case could make VTS or VTI rather unattractive, as tax could considerably impact the returns that you might get. Please note, I'm not a tax advisor, so you would need to get a professional tax opinion for your own benefit. If VTI, VTS, or any equivalent doesn't fit the bill due to tax reasons, the next best ETF is an ETF that invests in a global market index but domiciled locally. As mentioned, if you're in the US, there's not much reason for you not to choose VTI, aka S&P 500 Index Fund. An alternative, especially if you're outside of the US, is that you consider Vanguard Total World Stock Index as a known ticker VT in the New York Stock Exchange. Personally, being in Australia, Vanguard Global Shares Index ETF, known with having the ticker VGS, is the best choice for me as it is domiciled locally. In summary, it's important to consider an ETF that has underlying index that covers S&P 500 or the global markets, denoted by a MSCI World, as it captures an overarching performance of the world stock market. Given that the US is also the world's biggest economy with a GDP of $23 trillion, so the difference between S&P 500 and the world index is very closely aligned. So you're not really missing out much if you're choosing one or the other. Now for an important part, why ETF? If you recall the eggs in the carton analogy, ETF has an attribute which we call self-cleansing. This means the underlying assets for an ETF changes with the index that it represents. For instance, the shares comprised in S&P 500 index in the year 2020 is different to what it was in the year 2000. In those 2 decades, there are companies that have fallen off the chart, and there are new blood that has taken over. This attribute is what makes ETF very appealing. Just look at S&P 500 over the past 50 years. You can easily understand why VTS is on my top list. As I've mentioned before, it is important to align your risk appetite and investment goals to the product you're choosing. In another video, perhaps I will show you what indices are, or index, and how different types of indices perform differently. And if you have specific investment goals or at various stage of life you're in, it could be beneficial for you to tailor-make your portfolio. Now that you know what you should be looking for and invest in, you'll need to consider your dividend reinvestment option. Typically, Vanguard ETFs and managed funds will provide a quarterly dividend, or what they call distribution. You'll have a choice to either reinvest the dividend, which will roll to the amount together into your current investment, or you can cash it out to your cash account and it will be considered as an income. So that's your passive income right there. If you wonder how you can build a long-term wealth portfolio using ETFs, stay tuned and subscribe to this channel. I will show you how you can actually be a millionaire and how astoundingly powerful the compounding rate of return can be. This is IJ. Thank you for watching.